Running to Win, heard daily on Bible School Radio, 91.3 KDKR, Decatur, Dallas, Fort Worth, and on 91.3 KYJC, Commerce.
Portions of KDKR programming do not necessarily reflect the views of this station, its management, or staff.
Prudent Money with Bob Brooks is sponsored by the Prudent Money Foundation on 91.3.
Well, is it true or government accounting? If you get rid of the tax cheats, you get rid of the Social Security crisis. Today we're going to take a look. Stay tuned for Prudent Money. Good afternoon. This is Bob Brooks, and you are listening to the Prudent Money Radio Show. Thank you so much for joining me today. You know I do appreciate it. I do have Dan Pilla coming on to the program. I'm waiting on him to call in. Man. Dan, are you there?
I'm here, Bob.
Okay.
How are you?
I'm doing great. How are you?
I am just fine. I'm staying busy as usual. Enjoying the summer finally.
There you go. I'm sure that is a welcome time of the year for where you live.
Yeah, in Minnesota, you bet it is.
So how hot does it get in Minnesota?
Well, it can get into the 90s. That's not unusual at all. It doesn't get much hotter than that typically.
Well, at least you're getting a break. Well, hey, listen, I came across something today. You know, we all have our triggers, that things that just drive us absolutely crazy. I found the perfect article for you that I want you to comment on.
Okay.
So I can't be held responsible for anything you say. Okay, so it starts out here, and the author says, there's a clause in the debt ceiling deal that spells bad news for Social Security. If there were no tax cheats in America, there would be no Social Security crisis. But there are, and there is. Benefits could be paid, and payroll taxes kept the same for the next 75 years. That's not me talking. That's math. It comes from the number crunchers at the Social Security Administration and the Internal Revenue Service. Dan, tell me what's wrong with that.
Well, where should I start? First of all, the idea that Social Security would be funded indefinitely if people just paid their taxes is nonsense.
Right.
Because Congress continues to add more benefits for more people under the Social Security program that require more and more and more money. So the idea that everything is going to stay the same for 75 years as long as people pay everything they owe is just simply not true. All right, so let's start there. Then the second part of this thing that's nonsense is this claim that there's a clause in the debt ceiling deal where the president has to retreat from his crackdown on tax cheats is complete nonsense. All right, there is no clause in the debt deal that allows the IRS to be less tenacious with anybody they think they owe that they think owes more money or owes money they haven't paid to the government. What the clause in the debt deal is that I think this author is referring to, he never says this, at least in what I read, but I think what he's referring to is the part where they clawed back $21 billion of the $80 billion Inflation Adjustment Act subsidies. So they cut that by basically 25%. But that's not a clause that causes the president to retreat from his crackdown. The IRS is still using $47 billion of that money. All right, the $60 billion they have left, they're using 47 of that billion of those dollars to focus on tax law enforcement, and that's the same money that they had in the plan originally at $80 billion, Bob. So they're not doing anything different under the existing terms of the deal than they would have done if they got the whole $80 billion. That's number one. Number two is the $80 billion was spread over 10 years. You know, you and I have talked about that many times. So there's just simply no doubt in my mind that as the IRS retools using the $60 billion they have left, that they're going to go back to Congress 3 years from now, 4 or 5 years from now, whatever it is, to get more money anyway. So the idea that the IRS is now being shortchanged is just simply absurd. There's no merit to it whatsoever.
There was something that was different about this debt ceiling deal that we haven't really seen in the past. In the past, we've seen a lot of bickering, a lot of arguing, a lot of political drama in the theater, as I call it. This time, It didn't seem like any of that was going on, but at the same time, they leaked some of the things that they were making progress on, and they talked about, we're going to make that a hard date that everybody who owes student loan payments are going to have to start paying again. And I thought, that's all you got? And so it made me wonder if they are adding back in the revenue from those student loan payments into the debt ceiling deal to make it look like this fresh new revenue.
Well, that certainly could be, Bob, and it probably is the way these people connive with the ledger books is unbelievable. But one thing that was a positive out of this debt deal is that they did turn the faucet off on an awful lot of, not all of, but an awful lot of the COVID grants and the COVID, just free fall of money, waterfall of money that was coming out of Washington that wasn't all used up. There's all kinds of different programs that they created where the money wasn't all spent from those programs, and they shut a lot of that down. And of course, the student loan thing is one of them, but that works in the opposite. Rather than money flowing out of Washington into taxpayers' pockets, taxpayers were given reprieve, or student loan debtors, I should say, were given a reprieve on their loan payments, and now that money is flowing back into the federal government. So I think you're probably 100% right that there most certainly is counted in revenue against the debt ceiling. I'm sure that's true.
The funniest thing about all this is that you could rephrase that opening line that I read to say the solution would have been to keep the politicians out of the trust fund to begin with, and we wouldn't be having this problem. That just drives me crazy. I don't know. It's just...
Yeah, I mean, people don't realize, Bob, that every dollar that nobody has an account in Washington with your Social Security number on it that's loaded up with all of the Social Security quote-unquote contributions that you made to the federal government over the years. Nobody's got a bank account in Washington with their name on it. It doesn't exist. The Social Security money goes into general revenue. That's always been the case. From day one, it is nothing. It's classified in law. However they pitch it to the public is one thing, but it's clearly classified in law as an additional income tax, and it's calculated as flat, based on a flat tax rate up to a certain level of income. Right now, it's about $145,000 of income where it's capped. All right, so it's a flat tax on income that gets paid into general revenue and is used for current spending. So what happens is, to the extent that there's a Social Security trust fund, they're doing accounting to figure out what's going in and what's coming out, but the money does now and always has gone into general revenue and has gone out of general revenue for general spending. So basically, the easiest way to think about it is that your Social Security contributions that you make today are paying the benefits of people that are drawing Social Security out today. And when it comes time for you to retire and take your benefits, you will be relying on future taxpayers to pay their taxes to fund your benefits, because there is no Social Security. There's no Social Security account with your name on it. There just is not.
You've said many times that this whole tax cheat idea is just way overblown. It would seem to me, to come up with some of these ridiculous numbers they say that the number crunchers have come up with, that you'd have to know who's cheating and have to know by how much they're cheating to add the numbers back in, right?
Yeah, you're exactly right. And I'll tell you, when I read that article, I thought to myself, well, where are they getting those numbers from? Because even the Treasury Department, you might recall, and you and I talked about this quite at length, the Treasury Department 2 years ago, in January of 2021, when they started this whole push for $80 billion to fund the IRS, it was all premised on the notion that the top 1% of income earners were cheating on their taxes by underpaying about $180 billion in revenue. All right, and so we're gonna have to go after that money. We're gonna have to chase all that money. Well, 180 billion. Even if, first of all, even if those numbers are correct, which they aren't, and even if the IRS collected every single dime of it, which is never going to happen. It's not enough to fund Social Security for the next 75 years. That's just absurd.
Okay, here's another article for you. How much can the IRS snoop in your business without you knowing? A lot more now after a recent Supreme Court decision that is raising privacy concerns among experts. Last month, the highest court in the nation unanimously sided with the IRS, solidifying the tax agency's ability to ask for documents or financial records of those associated with a delinquent taxpayer without notifying the third party. So what's going on with this decision?
Well, what's going on, Bob, is this. We've got a very sophisticated and convoluted notice requirement in the Internal Revenue Code when it comes to the issuance of summonses for third-party records. So when you and I talk about third-party records, let's say Joe Dokes out here owes the IRS $100,000, and they're trying to look for information that will help them collect that $100,000. All right. So in aid of their search, they will issue what are called administrative summonses. They work like a warrant, but they aren't a warrant in any stretch of the imagination because it doesn't require a court or a judge to sign off on them. All right, some guy at the IRS writes it out, signs it, issues it to the third-party record keeper, and that third-party record keeper has to turn over the documents unless a taxpayer intervenes with the summons and then takes the issue to court. Here's what the hitch is. The definition of a third-party record keeper is very narrow. You and I would say, well, a third-party record keeper is anybody that doesn't owe the tax. That would be a third party. The taxpayer is the first party. The IRS is the second party. Any other person is the third party. So if the IRS wants to issue a summons on a bank account, for example, or on a credit card account, they issue that summons to the credit card company. The credit card financial institutions are defined as third-party record keepers. So under the law, the only time they have to give the taxpayer notice that the summons was served is if it meets that narrow definition of a third-party record keeper, which is a financial institution of some kind. If they go to somebody else, like an employer, for example, or if they go to, any other third-party source. Employer is a good example. They don't have to give the taxpayer notification that summons was issued, and the taxpayer then never has an opportunity to, A, know that the summons was issued unless he goes back and asks the IRS about it, which he's got the right to do, but nobody knows that, and B, then does not have the opportunity to file a court case to intervene in the summons process to stop it. All right, so that's the trouble with what's going on. Now, the Supreme Court did not do anything new here, all right? This has been the law for quite a long time. There's no changes. It's no different. All the Supreme Court did was essentially quash the argument that was made by the law firm that the summons was issued to, certifying that the law is plain in what it says, it's narrow in its application, and no, you don't have a right to intervene in this summons to try to stop it. And so, it seems like new ground was charted here, but, I've been talking about this problem for 30 years, Bob, that the IRS has ubiquitous investigating powers that are often, almost never checked by a federal court, and there's no other government agency that has this authority to do what the IRS can do.
This is Bob Brooks, and you are listening to the Prudent Money Radio Show. Thank you so much for joining me today. You know I do appreciate it. Hey, if you want more information on Dan, great website, great resources. Tax Help Online is where you want to go and check that out. In the past, we've talked about that the IRS, of course, is not perfect, and they make quite a bit of mistakes. And there was an article about that they apologized for an error that went to millions of taxpayers, I think primarily in California, that said they owed X amount of dollars in their taxes when they actually got an extension that to pay it over time because of landslides and flooding and that kind of thing. It makes the question that this brought up for me, and I thought would be a really good one to go over, is what do you do if you encounter an error with the IRS. Let's say that you're having a good day, you go out to the mail, you get that official-looking letter from the IRS saying that, no, you're wrong, you owe us $5,000, and but you're right, and then there's that feeling that, wow, do I really want to get into a match with the IRS? I mean, talk a little bit about how you should approach that, what your rights are, the best process, that type of thing.
Yeah, that's a good question, Bob, and that's a common feeling that washes over people when they get a notice from the IRS. They say, "Well, I don't want to get sideways with the agency. I'm just going to do what they tell me to do." But if you read the notice and you realize that they are in fact wrong, my question is, why would you ever pay an additional tax or a penalty that you don't owe?
Sure.
You got a responsibility to pay the tax you owe in full and on time. You don't have a responsibility to pay a dime more than you owe. And so my response to your question, Bob, is one word: appeal. Every single decision that the IRS makes, whether it's in the form of a notice, a penalty assessment, an audit result, collection action, all of these things are subject to appeal. The appeals process varies depending on what type of issue we're talking about, but there's always a right of appeal. And as a matter of fact, one of the 10 most basic, 10 fundamental rights on the list of taxpayer bill of rights that's in the Internal Revenue Code is the right to appeal an adverse decision and to have a hearing in front of an independent tribunal. That independent tribunal is called the Independent Office of Appeals. This is a function within the Internal Revenue Service that's staffed specifically for the purposes of hearing and reviewing challenges to what the IRS has done. And these appeals officers are pretty darn good. I got to tell you, I've got a tremendous amount of experience with the Office of Appeals and have had for all the 40-plus years that I've been in this business. And the appeals office is the way to get problems fixed. There's no question about that. They have the authority to review what the IRS has done. They're mandated to review the facts and circumstances that the taxpayer presents, the arguments that they present, the defenses, all of the issues, and to come to the right decision. And very often that's exactly what they do, is come to the right decision. And so the people need to know about the appeals office and the right to utilize the appeals office to get resolution of these cases.
Well, and most important, I think 2 points. First of all, there is a process that's a good process that's out there for you to use as a taxpayer. And second, definitely not something to be afraid of. I know that, and I'm sure you've seen these and done, and I know you're working on bigger cases, but even the smallest of things that have come back on clients, and I've written a letter for, never have had the IRS come back and say, "Oh, no, you're wrong." It's just a matter of getting them the right numbers. Someone sees it and they correct it, and you go on your way. Nothing to be afraid of. And I think that's definitely the message we want to send.
Yeah, no question about it. There's nothing to be afraid of. It costs a postage stamp to execute the appeal. Even if the taxpayer is wrong, which happens from time to time, people get confused, they make mistakes, they don't understand the IRS's notice. Even if the notice is correct and the taxpayer is wrong, you're no worse for the wear by executing the appeal. You don't get penalized for it. You don't get additional fines for it. The tax bill doesn't go up because of it. You get the opportunity for review and the satisfaction of knowing that we've come to the right answer here. This is just very critical for people to understand this. It is not expensive and it's not risky. And I'll tell you something else. Another one of the reasons why people don't challenge these things is they're afraid that the IRS is going to open up a whole other can of worms. Well, they're going to dig into this, and what if they dig into that? Listen, it is a written requirement of the Office of Appeals that they not open up other issues that weren't already opened by the IRS or the taxpayer. So they're never, Bob, looking for other issues to dredge up just because somebody did an appeal.
Well, and think about it this way. They don't have time.
Well, yeah, that's the other thing. There's no question they don't have time. There's no doubt about that.
I mean, I'm sure if you were working for the appeals office, the IRS, you just want to get these cases done, not looking for anything.
No question about it.
Anything else.
That's absolutely right.
So let's talk a little bit about you're filing your taxes, and you know that there's something that might trigger a letter back that they might not agree with. There is a letter of instruction that you can include. Very smart to do it. Let's just get it all out on the table and talk about it. Here's my numbers. Here's my rationale behind the numbers, just in case you need it. And I don't think a lot of tax people understand that's there and available and should be used.
Yeah, that's exactly right, Bob. You're talking about Form 8275, which is known as a disclosure statement. It allows you to provide information with the tax return that could answer that will answer or provide information with respect to potential questions in the tax return. So it's a very important tool to know about. I've talked about that for years, and yes, people should be aware of that and use it.
This is Bob Brooks, and you are listening to the Prudent Money Radio Show. If you want more information on Dan, taxhelponline.com is definitely where you go. And a lot of the things we talk about you can find in his monthly newsletter that's on the site as well. But just a lot of great information. The thing I've always liked about his site and the information that's on there is a lot of it's free, and you can gain so much knowledge just by going there. Let's talk about, and we've got about 3 minutes left. Let's talk a little bit about the overriding fear. Probably goes beyond, are they going to look at something else? Is this going to create a full-scale audit? And I think it's good just to kind of alleviate the fears of that. I mean, to talk a little bit about how people are even selected for audits in the first place.
Yeah, the selection process is done through a computer program known as the discriminant function system, all right, the DIF program. And what it does is it compares every line of your tax return with national and regional statistical averages for a person in your same income category and profession. If any line of your return is out of sync with the averages, the difference is scored. It's called a DIF score. The higher the score, the more likely you are to be audited. So what the computers are saying is that the further you are away from national averages for deductions in income, for deductions for a person in your income category and profession, the more likely there is to be a mistake on the return. But just because you're selected for audit, Bob, doesn't mean there is in fact a mistake. Just because you're selected for audit only means that you're out of whack with the averages. But the challenge is to prove that your tax return is correct. This is what people need to understand. You're selected for audit. And at the beginning of the process, the IRS doesn't know whether your return is wrong or not. All right, what they're challenging you to do is prove that the return is wrong or is correct. Now, here's where most people fall off the tracks. The IRS does not have to prove you made a mistake. You have to prove you did it right. So if they question an item like a home office deduction for a business, for example, or charitable contributions for an individual, if they challenge that item, you have the responsibility to prove the item is correct and that you're allowed to claim it. And if you can't prove it or don't or won't, they just disallow it. Now you owe them extra money. That's how the process works.
TaxHelpOnline.com is where you go for more information. Dan, always a pleasure. It's a blessing to have you on the program. You just bring some great information, helps a lot of people out. So always appreciate it and appreciate you.
All right. Thanks, Bob. I appreciate that.
This is Bob Brooks, and you are listening to the Prudent Money Radio Show. It really is a blessing to have access to Dan to come on the program. And if you ever got any questions for Dan, send them. You can go to his website and send them to him, or you can send them to me. I'll forward them to him. But Dan's heart is in helping people with the IRS. He's got one of the most incredible stories of how he started in this business. I'll have to get him to tell it sometime. And it was started, I think, back when he was a teenager, and he actually defended his dad in an IRS case. I can't make this stuff up. It's a pretty incredible story, and obviously what he was meant to do. So once again, TaxHelpOnline.com. This is Bob Brooks. If you got a question for me, please go to the website at PrudentMoney.com and send it in, because we are all out of time. Till we do meet again next time, keep the faith and have a great rest of the day.
That's all the time we have for today. Questions or comments for Bob, or to find out more great information like what you've just heard, visit www.prudentmoney.com. Be sure to join Bob Brooks again for the next edition of Prudent Money.